How's it going, YouTube? Welcome back to another video with the House Money Investing channel. Today's video, we're going to go over some stock movements, also some nice stock picks I got for you guys, as well as some gains I made for the day. First up, we got Roku, ticker ROKU. Hit its 52-week high today, which is great. Then we got Plug Power. It was up 35.11%. We got Lemonade. It was up 27.52%. We got CRISPR. It was up 18.66%. Then we got my Webull portfolio valued at $1,753.55. It is up a total of $328.48, up 23.5%. 32 positions in this portfolio. The top position is Spotify. I got one share. Cost basis was $261.40. That share is now worth $330.80. It is up $69.40. Percentage gains of 26.55. Then for some stock picks here, we got Plug Power, something I already own long term, something I'm adding right back to the watch list to swing trade again. I'm currently up 183.49% in Plug Power. I'm not going to go too much in detail in Plug Power. I have several videos on Plug. Then we got ArcQ. It hit its 52-week high. And then we got a new swing trade here, ticker GIGE. This here is a title ETF trust, SoFi gig economy. This one here was beaten down about almost 30% during the pandemic. Still finished the year up 97%. It is a new IPO, started back in late May of 2019. So definitely more of a growth play. It just pay a small dividend of 0.34%. This thing is still super undervalued, super low PE ratio. And basically, gig invests in a firm expected to benefit from the gig economy as defined by its advisor, and it's an actively managed portfolio. Then we got TGIF, which is a weekly income ETF. This thing right here, it doesn't really move very much. It is a new IPO. It started back in October. It did finish the year up 4%, and it does pay a small dividend of 0.68%. This is more of a safe play, something that's not gonna fluctuate much, not have very much volatility, and is a managed US dominated fixed income ETF aiming to provide weekly distributors to investors. Then we got another new trade here. This is SFYF, and this here is a SoFi 50. This one here also was beaten down about 40% during the pandemic. Still finished the year up 36%. New IPO since May. Definitely more of a growth play. Great PE, super undervalued. 0.40% dividend, and this tracks an index of 50 US listed stocks, mostly widely held in self-directed brokerage accounts of SoFi securities based on the highest weighted average value. And then we got ticker HAC. This is going to be a cybersecurity play ETF. It's going to give you great diversification with low volatility into the cybersecurity market, which is a really booming sector at the moment. I do own a lot of individual cybersecurity companies, but it's always great to have ETFs just to get a wide range of exposure. It was beaten down about 30% during the pandemic, still finished up 35% on the year. This particular ETF typically grows about 15% a year with a nice little dividend of 1.13%. And basically, it's a weighted index that targets companies actively involved in providing cybersecurity technology and services. Then we got ticker ICLM. This is a great play, something I'm already in. This is a global clean energy ETF. I'm currently up 16.80% in my position. This thing grows on average about 50% a year. So definitely a nice growth ETF with a very small dividend of 0.26. clean energy is on a huge wave at the moment. And this is going to basically track the 30 of the most liquid companies involved in the business related to clean energy. Then we got ticker DGS, provided by WisdomTree. This is an emerging markets small cap dividend ETF. This one was down about 40% on the pandemic, still finished the year up above 3%. This one on average gains about 8% a year. Plus it's got a great dividend of 3.64%. So it's about 11 to 12% return on your costs with low fluctuation. It also is undervalued. PE's at 11.38, and this tracks small cap companies emerging. Basically, it's the bottom 10% of WisdomTree emerging markets dividend index. Dealing with small cap companies. Then we got DGL. This here is a Power Shares DB Gold Fund, and this one here on the year wasn't very much affected by the pandemic. Finished up 18%. It usually gains about 11% a year. It's not a dividend payer, but it's an index of gold futures contracts. It optimizes the contracts selected on base of shapes and futures curves. So nice play into precious metals, give you a hedge against the fiat currency. Then we got DGP, which is a DB Gold Double ETN. And this one here also was not very much affected by the pandemic, down about 12%. It still finished the year up 37. And it on average gains about I would say roughly about 18% a year. It isn't a dividend player, it's more of a growth play, and it tracks the performance of contracts related to gold. So once again, a nice exposure into that gold market. Then we got a Fidelity First Morning Dividend Leaders ETF. This is something I'm already in. I like Morningstars and I love dividends. I'm currently up 2.19%. At the same time, I'm collecting that 4.40% dividend. And this one is, still beaten down. It was down about 40% during the pandemic. And I'm already up 2%. I expect to get another 6% out of this stock here in 2021. Super undervalued, very low PE ratio. And this basically tracks a dividend weighted index of U.S. companies with consistent and sustained dividend payments. The fund holds roughly about 100 securities and excludes REITs. Then we got something else I've already swing traded. I'm added back to the stocks list. GUNR, GUNR. Currently, I am up 5.7% in this position, as well as collecting that 2.61 dividend. Of course, beating down about 40-50% over the pandemic. Finished the year up above 5%. This one typically gains about 11% a year, with a nice dividend as well. This one's still super undervalued, very low PE ratio, and it tracks companies that operate, manage, or produce natural resources in energy, precious and industrial metals, timber, and water. So a nice diverse play there. Then we got another stock here, PBA. This is something I hold long term. This one here was beaten down, about 60-70% during the pandemic. Still has about 26% growth left in it, with also paying that nice dividend of 7.17%. Typically it grows about 5% a year, but it's got to make a bounce back for this year. And this one has great analyst ratings, 82% buy rating from 22 analysts. The company's presence in Western Canada exposes Pembina to attractive regions with competitive project economics. Upon completion of the expansion program, the company will be in position to reward investors with dividend increases. The growth portfolio will increase the attractiveness of businesses, increasing guaranteed long-term contracts, which is approximately about 85% of the business. Of course, EPS has been down. That's pretty much why it's beaten down. This is an energy company out of Canada. Engages in the provision of transportation and midstream services. It's got a few sectors. The pipeline segment, includes conventional oil sands and transmission pipe systems, crude oil storage, and related infrastructure. They have a facility segment, which is related to infrastructure that delivers the firm's customers with natural gas and NGL services. The marketing and new venture segment undertakes value-added commodity marketing activities, including buying and selling products and optimizing storage opportunities. So a nice play here. Definitely a long-term play. And one play everybody loves here is STAG, STAG, something I hold long-term. I'm currently down on STAG about 8.4%. I do get a 4.76% dividend, but this thing is just down due to the pandemic. I see about a 5% growth in it for 2021. Typically grows about 10% a year, but this one still needs to make a bounce back from 2020. It's got a nice 67% buy rating from 12 analysts. It's got great EPS. It's a real estate company out of Massachusetts, and it focuses on acquisition and ownership of operation of single tenant industrial properties through the United States. So definitely a great read there. Then we got a ticker BNDC, and this is a select bond fund. This one as well isn't going to fluctuate very much. It might gain 1%, if that, every year. This is a place where you can store your money. It's pretty safe, like a savings account, except for in this thing you're going to get a 2.23 dividend yield payout. So there's going to be a nice little 2 to 3% interest on your money. It's something that's not going to fluctuate very much at all, like I said, within 1%. So just to hedge against the fiat currency, I always like to store a little bit of money in bonds throughout my portfolios, to have that safe place for cash instead of just have it sitting on the sidelines not doing anything. I'd rather put my money to work. And then we got ARTQ, which hit a 52 high today. Next up we got Workhorse. This is something I'm long term in, something I'm steady swing trading. This thing has really been beaten down due to the USPS contract steady getting delayed. I think it's been delayed like 3 times. I don't know why people keep pumping and dumping this thing. The fundamentals of the company do not change whether they get or don't get the contract. They just got an order through Pride for like 600 or 6,000 trucks. I forgot exactly how many it was, but they just got a bunch of trucks on order. So it was up 16-17% today. I'm up 30.80% in my position. This is electric EV company. They make last mile delivery vehicles. So definitely great fundamentals, and it's something I believe in for long term. Then we got Papa John's Pizza. Everybody knows what Papa John's is, right? Papa John's during the pandemic, it was beaten down about 50%. Still finished the year up 47%. Papa John's typically will grow, probably about 14% a year. So a nice little growth play with a small dividend of 0.96%. I'm currently up 24.87% in Papa John's. Has strong analyst buy ratings of 67% buy. Papa John's has great EPS, and basically it's a franchise pizza delivery and carry out restaurant. It has a few segments like domestic company, owned restaurants, North American commissaries, and things of that nature. So basically it's a pizza joint. I'm pretty sure everybody knows what Papa John is, so I'm not going to get too in depth with that. And then we have Jumia, or Jumia, however you want to pronounce it. This is something I hold long term, something I'm going to continue to swing trade. This thing here is basically the Amazon of, Africa. It's a recent IPO back in April. It was up like 500% on the year. This is an e-commerce play. Strong analyst buy ratings. Strong EPS. And like I said, it's an e-commerce platform. Pretty much similar to Amazon, but for Africa. So definitely a great play. It's going to give you exposure to a different segment outside of the United States. That's going to be it for the top stock picks of the day. If you like the video, hit the like button, subscribe, hit the bell, all that good stuff. I appreciate you guys for tuning in.